Welcome to MMH Fund, where we talk strategy, timing, and opportunity in today's ever-changing real estate market. I'm Tessa Morgan, and today we're diving into one of the most talked about and misunderstood investment models gaining serious traction: build-to-rent, or BTR. More than just a buzzword, build-to-rent is quietly becoming the go-to approach for investors who want consistent cash flow, scalable assets, and long-term value without the unpredictability of the traditional resale market. If you've been wondering why institutional money is flooding into this space, or how you as an individual investor can tap into the opportunity, stay with me. This episode will give you the full picture. Let's start with the basics. What exactly is build-to-rent? It is exactly what it sounds like. Residential properties, usually single-family homes or townhomes, that are built specifically to be rented, not sold. Now, this is different from traditional rentals, where investors buy scattered resale properties. With BTR, developers and investors plan entire rental communities from the ground up, often with consistent designs, shared amenities, centralized maintenance, and professional management in place from day one. Think of it as combining the cash flow of multifamily with the lifestyle appeal of single-family homes. Tenants get more space, privacy, and a neighborhood feel. And investors get scale, efficiency, and a highly desirable rental product. So why is build-to-rent gaining momentum? 1. Stable income. With the volatility we've seen in recent years, inflation, rate hikes, even supply chain issues, investors are prioritizing predictable returns. BTR offers strong rental demand and lower turnover compared to apartments. 2. It's scalable. Instead of buying homes one by one, you can build or acquire dozens or even hundreds of units at once. That means centralized operations, lower cost per door, and better long-term planning. 3. Demand is strong. Millennials and Gen Z are delaying homeownership, and many families prefer renting homes with yards, garages, and pet-friendly spaces without the burden of a mortgage. BTR communities are the ideal solution. 4. Strong institutional confidence. We're seeing a major shift as more capital flows into BTR. The investors are betting on long-term demand and reliable returns, especially in metro areas with high housing costs and low ownership rates. That growing interest is a signal. Build-to-rent isn't just working, it's becoming a core part of modern real estate strategy. What really sets BTR apart is how well it performs over time. When you build a community from scratch, you get newer infrastructure, lower maintenance costs, and less capital expenditure compared to older homes. You're also able to command higher rents, especially when you integrate community features like parks, walking trails, co-working spaces, or fitness centers. And because the homes are built with renters in mind, the layout, materials, and systems are optimized for durability and efficiency. Here's the big picture. With BTR, you're not just buying income-producing properties. You're creating long-term, institutional-grade assets that hold their value and appreciate over time. That's why pension funds, real estate investment trusts, and family offices are investing in this space. They're playing the long game. And if you're an investor looking to reduce volatility and build true wealth, this model makes a lot of sense. Now, as with any investment, there are a few things you should keep in mind before jumping into BTR. Location is everything. You need strong rental demand, job growth, population growth, and infrastructure. The DMV area, like Virginia, Maryland, and parts of the DC metro, checks all those boxes. These markets are supported by the government jobs, tech expansion, and steady influx of professionals and families. The demand for spacious, rental-friendly housing, especially near transit and top school, has positively increased over the years. Zoning and permits can also slow things down. Partner with local experts who understand the municipal landscape and can help navigate regulatory hurdles. Operations matter. BTR is a business, not just an asset. Whether you manage in-house or hire a third-party property manager, make sure your operations team understands the service expectations of today's renters. Maintenance responsiveness, digital rent payments, and tenant communication all impact occupancy and retention. And finally, exit strategy. You need to know whether you're holding for cash flow, planning a bulk sale, or preparing to refinance. Understanding your goals up front will guide how you structure the deal from day one. So who is BTR best suited for? If you're a developer, BTR gives you a way to create long-term assets rather than flipping and exiting quickly. It also offers consistent income, making it easier to weather market cycles. If you're a private investor or fund manager, BTR allows you to build or participate in larger, more efficient portfolios without the operational headaches of scattered single-family rentals. And even if you're an LP or passive investor, more and more syndications and funds are offering BTR as part of their mix, giving you exposure to the asset class without needing to build anything yourself. Bottom line, build-to-rent is one of the most flexible, scalable, and recession-resilient strategies available in today's market, especially if you're focused on long-term returns. To wrap up, build-to-rent is not a passing trend. It's a deliberate investment model with strong fundamentals, growing demand, and increasing institutional interest. As affordability challenges persist and homeownership becomes less accessible for many, the demand for quality rental homes will continue to rise. BTR is simply meeting that demand thoughtfully, profitably, and at scale. If you're an investor looking for long-term income, portfolio diversification, and a future-proof model, build-to-rent deserves your attention. Thanks for listening to MMH Fund's podcast. If this episode brought you value, make sure to subscribe, share it with your network, and leave a quick review. Your feedback helps us bring smarter content to sharper investors like you. Until next time, invest wisely, stay informed, and keep building for the long game.